Good morning for this Thursday, October 3rd. And the one market that I want to talk about today is the U.S. 30-year T-bond futures contract. Okay, this is a daily chart. Again, the symbol would be the @ US. Okay, of course, if you're trading the actual futures contract, you want to be trading the Z contract, which is the December contract. Okay, so what I'm noticing here is the market is really starting to contract. Right, this white horizontal line represents pretty much these highs right up in here. So you look at all these highs. The lower white horizontal line represents these two lows right in here. And if you look at the range from high to low, the market's really contracting. Now, think back to physics, right? When something contracts, it's normal that the market has to, by law, right, by the natural law of physics, the market's got to expand. So the market is going to break here at some point. Okay, so I want to be aware of this. So this is what I've done. Again, you can see the white horizontal line on these highs, right, and the white horizontal on the lows. So these lows, this is how I would be looking to play this. These lows are 132 and 22.30 seconds. Okay, these two lows are identical. Obviously, the overall trend is down, right? As you can see, the bars are red. So if the market were to break down through 132 and 22.30 seconds by 3 to 4 ticks on an intraday basis, I would be looking to go short this market. Okay? And as the market nears this 50 exponential moving average at 132.04, I would be bringing my stops down to break even, and I'd be looking to lock in some profits. And then I'd be looking for the market to fall further between the mid to the lower band down in here, which is roughly about 131 and 12.30 seconds. Okay? That's what I'm looking to do if the market is able to break down through these lows. Again, 132 and 22.30 seconds. Now, on the long side, on the potential long side, it's a little different here. I would have to see the market break up through this high, which, by the way, is 133 and 29.30 seconds. I would need to see the market close above that number before looking to take a position to the long side. So a little different. So a mere penetration on an intraday basis up through this high would not be enough for me to be buying it. I would need to see a close above this 133 and 29.30 seconds, okay, in order to look to buy this market. All right. So if the market breaks up through the high, I'm looking for a few levels to be tested. Okay, I'm looking the first level would be 134.19, this high right up in here. The second level I would be looking for is 135.14. And I also am going to measure from the high down to this low. And as you can see, that first Fibonacci retracement, the 38.2 of this big move, right, from this high up in here down to this low, would be right in here, which is very close to this number I gave you right there. So those are the two numbers I'd be looking for. And of course, this is the 200 exponential moving average. I'd be looking for this number as well. But first things first, right? First, we'd be looking for a test of the 134.19, right? 134.19, and the second level 135.14. So I urge you to keep this on your radar. The U.S. 30-year Treasury bonds. Okay, now if you trade an IRA or you don't want to trade the futures, or if you don't have a futures account, you can trade the TLT. TLT, the 20-year Treasury. It's very closely related to the 30-year bond futures. But as you can see, it's not as rectangular up in here. Okay, but it's very similar, right? It matches, it pretty much mirrors it. Pretty close, right? Trend is down. It's just, again, it's not as much of a rectangular looking consolidation as you can see here in the U.S. bonds, the futures. Right, futures are a little bit more orderly in here, whereas the TLT, not so much. But if you want to take advantage of that trade and use the TLT, you can certainly do that. Or, you know, if you like the TBT, I like the TBT as well. It's not as orderly, but again, if the bonds, right, if the 30-year bonds break down through the lows, the TBT would be moving up, right? It's an inverse it's an inverse ETF. So if the bonds break down through the lows of that range, TBT will move up in price. Okay, so there you have it, folks. That's what I'm looking at, the 30-year Treasury bonds. If you recall, I talked about the Forex yesterday, about 5 currency pairs. We're still looking at those, and when things get interesting in the Forex, in terms of when I'm ready to take a trade, I will let you know. Have a profitable day. Hope that helps. Bye for now.